It's a simple fact that not every trade you take is going to work out how you want it to. So having a system that stops winners turning into losers is going to help you minimize your losses and maximize your profits long term. However, most people get it wrong. They go break even on their trades way too early, and this means they miss out on a lot of profitable moves. So in this video, I'm going to show you my break-even strategy and how you can develop a break-even strategy that minimizes your downside but doesn't cap your upside. Let's get into it. Okay, so for those who don't know what a break-even strategy is, the concept is that when we are in a trade that is running profitably, we don't want that to turn into a loss. So what we can actually do is move our stop loss to the break-even level, and generally what that's going to do is stop our trade turning into a loss. Because if the market decides to pull all the way back up here, rather than being taken out of the trade for a loss, we'll simply be taken out where we got in, and it will be as if the trade never happened. Now, in theory, this is a brilliant concept, and actually when applied correctly, it is indeed a brilliant concept. But the problem is most people don't know the logical points to go break even, so they end up going break even too fast, and they end up getting stopped out before the trade runs in their favor. So how do we stop this from happening, and how can we break even logically to make sure that we don't get stopped out of winning trades, but we do avoid the losing trades? We do this by focusing on structure. A common break-even tactic that people do is when a trade is running 1R, 2R, or 3R in profit, I'll go break even. Now this, in my opinion, is not a good tactic to follow, because even if your trade is 3R in profit, it's very possible that it could come back to retest the entry before continuing 10R into profit, for example. So I actually prefer to weave my break-even strategy into the structure of the market to give me the best odds of minimizing losses without getting stopped out early on winning trades. So here's an example of a trade I took earlier in the week, and I'm going to show you my break-even system and my way of approaching this strategy on this position. So this trade got tapped in and then moved up into profit, okay? And when the trade was moving into profit, I decided to go break even on it because I wasn't sure whether it was going to continue to the upside or move to the downside. We are never 100% sure when we're in a trade. Now, instead of just following a basic rule saying, I'll go break even when I get to 2R or 3R, instead I like to follow the structure. So what we can do is look at the structure of the actual trade we are now in and base our break evens around that. So I'm going to go down to the 1 minute time frame here, and we'll look at the trending structure on the 1 minute time frame. So we have our entry to the trade, and then after that we had a break of structure pushing over this level. So we have a higher high. We then came down and we formed a higher low. And what we then did was push up and once again form a higher high. So at this point, we can see that we have a trend intact, and that trend looks a little something like this. Now this tells me something. This tells me that if I am looking to buy and I want to be on the buy side of this market, I don't want this structure to shift back to the downside. So we can now clearly see that if the market was to take out this level, the trade would be invalidated, okay? Because we are looking to follow the uptrend, and the uptrend is only intact if the market makes a higher high above this level here. So if the market does this, the trade is valid. However, if the market is to sink below that level, the chances are we are actually just going to make a reversal back to the downside because the structure is no longer valid. So this allows us to logically go break even, understanding that our trade will only be stopped out if the trade becomes invalidated. So now that we have this clear higher high and higher low structure, what we can do is get our stop loss and pull that to the break even level. Because now we know if the market does push under this level, we would prefer to just be out of this trade and call it quits. And as you will see, the trade did get stopped out at break even because the structure was invalidated, but we got out with no loss. And this break even strategy actually gives you the highest probability of catching the win as well. Because if we did pull all the way back down to this level here, we would have just continued the trend up. So there's actually no need to panic in the position. We can just go break even, and now we know it's either going to continue with the trend and win, or it's going to break the trend and we're going to get out with no risk, no loss. So why follow my break-even strategy? What makes this any better than any other basic concept? Well, I'm going to show you an example of the classic go break-even when we hit 2R system that most people use, and I'll show you why I don't like this. So here we have a hypothetical trade. Okay, we're in here, our stop loss is over the high, we're targeting this low. Now, if you were to follow the basic rule of go break even when a trade hits, for example, 2R, you run the risk of being stopped out due to structure and imbalances, okay? Now, if you remember in our example, we were following the structure. So we needed to see a trend intact and then we would follow that with the break-evens to give us the highest odds of being safe without getting cut out early. If you just follow this basic strategy of go break-even when you hit 2R, you're going to run into this a lot. So now the trade has ran 2R into profit, okay? So what that means is we're now going to move our stop to break-even. Now, if we do this, the risk we then have is that the market can come back and fill the structure and then continue to the downside. So looking at this, you can see that our trade would be taken out at break even, and then the market actually continued to move to the downside. So even though you were right about the position, you've been stopped out at break even when you didn't need to be, because there was a very logical reason for the market to come and retest this supply zone once again. Now, the way that we would have done it is actually wait for this rollover, and when we make that next lower low, we actually once again confirm that trend structure. So we always want to see a 3-wave move like this before we start going break even. An impulse, a correction, and an impulse into a new lower low or higher high, depending which way we're trending, and then we can actually go break even on this position. Because at this point now, it makes little sense for the market to pull back to that level unless the trade is invalidated. So with our break-even strategy, let's see how the trade plays out. As you can see, we avoid getting taken out of the trade early because we are following the structure, and we only want to then stay in a move if the structure stays intact. Now, this is also a strategy you can use for trailing your stop losses into profit, but that is something I'll cover another day. So what do you think about this? Are you going to try this break-even strategy out for yourself? If you are, I recommend you backtest it first before taking it to the live markets with real money. It will take a little bit of getting used to, but it can be a very beneficial tool to add to your trading to minimize your losses, cut your downside, and maximize the profit and keep the upside open. Now guys, check out the link in the description. I have a free training video that you can watch right now that's going to be super valuable for opening your eyes to a new perspective of the markets. And with that said, I'm out. Thank you for watching and have a great day. I'll see you in the next video.